Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, February 5th, 2026, and here is everything you need to know as the markets close for today. Indian equities finally pause for breath after a strong recent run, with traders turning cautious ahead of tomorrow's Reserve Bank policy decision and more details around the India-United States trade deal. The Nifty 50 slipped about 0.52%, settling a shade above 25,640, while the Sensex lost roughly 0.60% to close just above 83,300. The tone through the day was one of consolidation rather than panic. The headline indices drifted lower on profit booking in metals, technology, and select high beta names, even as banks and defensives held up relatively better. In contrast, the Bank Nifty managed to stay in the green. It recovered from an intraday dip below the psychological 60,000 mark to finish near 60,238, up around 0.33%. That relative strength in financials has been a theme this week, supported by steady earnings from large private lenders and expectations that the RBI will stay supportive on liquidity even if it pauses on rates. Under the hood, the broader market was softer. The Nifty Midcap 100 index eased about 0.28%, while the Nifty Smallcap 100 fell nearly 1.3%, reflecting profit-taking in some of the year's biggest winners. On the flow side, as per the latest exchange data available, foreign portfolio investors were marginal net buyers to the tune of roughly 30 crore rupees, and domestic institutions bought around 240 crore, which helped cushion the downside, but was not enough to flip the tape back into the green. On the currency front, the rupee was relatively steady, but still on the weaker side of its recent range. The dollar-rupee pair closed around 90.4 to the dollar, a touch stronger than the panic levels above 92 seen late in January, but not far from its historical lows. For equities, that combination of a mildly firmer rupee and expectations of lower United States tariffs on Indian exports was broadly supportive of export-oriented and rate-sensitive pockets, but it did little to offset the pre-policy jitters in global cyclicals. Shifting to stock-specific action, today's leaders and laggards told a clear story of rotation. On the Nifty 50, retail and healthcare names were in favor. Trent rallied close to 3% as investors continued to reward its strong same-store growth and aggressive expansion guidance, keeping it one of the more resilient consumer discretionary plays in this market. Max Healthcare also added well over 1%, with hospital stocks still riding the twin tailwinds of solid occupancy and optimistic management commentary into the new financial year. Interestingly, despite global metal prices softening, Tata Steel managed gains of over 1%, helped by brokerage upgrades and optimism around domestic infrastructure demand, even as the broader metal pack came under pressure. On the flip side, Hindalco was among the biggest index casualties, sliding a little over 3%, as investors reacted to the pullback in aluminium and base metal prices after a very strong January and locked in profits following its recent outperformance. Eternal, the newly rebranded internet and quick commerce heavyweight, dropped nearly 2.5%, with traders trimming exposure to richly valued growth names amid a global tech wobble and concerns about how new automation tools might impact outsourced services demand over time. Bharti Airtel also gave up more than 1.5%, extending a bout of post-results profit-taking as the market awaits clearer visibility on tariff hikes and capital expenditure intensity. Beyond the large caps, mid and small caps saw sharp two-way moves. In the Nifty Midcap 100, PB Fintech, the parent of Policy Bazaar, jumped over 7% as the street cheered improving profitability metrics and a constructive view from several brokerages on the platform's long-term growth runway. Jubilant Foodworks gained more than 5%, helped by hopes that lower interest rates and rising disposable incomes will support discretionary consumption through the summer. On the losing side, Tube Investments of India slumped close to 10% after a big prior rally, as investors reacted nervously to management's cautious commentary on near-term margins and took money off the table in capital goods names that had run up sharply. In the small-cap universe, renewable and engineering favorite Suzlon fell just over 4% on profit booking, while Multi-Commodity Exchange of India dropped nearly 4.7% as extreme volatility and the crash in silver futures raised questions about near-term trading volumes and risk appetite in the commodity space. For those tracking new listings, as of the latest available data, there was no major mainboard IPO listing on the exchanges today. Activity in the primary market is currently centered on a clutch of ongoing and upcoming SME and mid-sized issues, with the real heavyweights scheduled a bit later in the month. From a levels perspective, Today's price action in the indices was all about testing support rather than breaking new ground. The Nifty 50 spent much of the session oscillating between roughly 25,580 on the downside and 25,750 on the upside, repeatedly probing the immediate support zone, identified around 25,640 in derivatives positioning and pre-market technical setups. That band broadly held into the close, keeping the stronger demand area in the 25,500 to 25,450 pocket intact for now. On the top side, the index is still capped below the supply zone around 25,800, with a more significant resistance cluster sitting up near 26,000. The Bank Nifty told a slightly more encouraging story. It briefly slipped below the psychological 60,000 mark intraday, but dip buyers stepped in near the 59,800 support flagged by many traders, allowing the index to reclaim and close above 60,200. Immediate resistance now stands in the 60,400 region, with a stronger hurdle closer to 61,000. A decisive move above that band would be the trigger for the next leg higher in financials, whereas a break back below 59,400 would warn of a deeper correction. Sector-wise leadership was relatively narrow. Banks and financial services outperformed, helped by the firmer Bank Nifty and steady credit growth expectations into the new rate regime. Healthcare, select consumer names, and some capital goods stocks also found buyers, aligning with the broader domestic growth story highlighted in the recent economic survey and union budget. On the weaker side, metals and mining stocks were under pressure as aluminium, copper, and other base metals eased after a hot January, and the BSE Metal Index reflected that downdraft. Information technology remained a laggard too, with investors staying cautious after a global tech sell-off linked to fears that new artificial intelligence automation tools could weigh on traditional outsourcing demand in the quarters ahead. Turning to the policy and macro backdrop, today's trade was very much framed by expectations into tomorrow's Reserve Bank of India Monetary Policy Committee outcome. The MPC is in the final day of its February meeting and will announce its decision on Friday morning, with Governor Sanjay Malhotra's press conference to follow around midday. After a cumulative 125 basis points of rate cuts since early last year, and a 25 basis point reduction in December that took the repo rate to 5.25%, the consensus now is for a pause, with the focus shifting squarely to how the RBI manages liquidity, bond yields, and its growth and inflation forecasts ahead of the new data series for GDP and inflation that start later this month. In commodities, the cross currents remain strong. Brent crude eased back toward the high 60s per barrel region, down roughly 1 to 2% on the day, as confirmation of planned talks between the United States and Iran in Oman tempered some of the geopolitical risk premium that had built up in oil over the past couple of weeks. As of the latest ticks, near-month MCX gold futures had swung in a jaw-dropping range. Contracts opened the recent stretch close to 1,53,000 rupees per 10 grams, spiked toward an intraday peak above roughly 1,60,750 earlier this week, and then reversed sharply, with today's trade seeing prices skid back toward the 1,50,000 zone at one point. Silver's moves have been even more extreme. Retail silver prices across the country are hovering around 3,20,000 rupees per kilogram, only modestly below last week's peaks near 3,50,000. But February MCX silver futures spent the day locked at the lower circuit, pinned near 2,80,000 a kilo, as speculators continued to exit leveraged positions. So what does all of this mean for the technical outlook into tomorrow's session? For the Nifty 50, the immediate battle lines are fairly clear. On the downside, the first important support remains in that 25,500 to 25,450 belt. As long as the index holds above that area on closing basis, the primary trend stays one of consolidation within an uptrend, rather than a full-blown reversal. Below that, the next zone to watch would be closer to 25,300, where several traders are eyeing value buying opportunities if the RBI's tone tomorrow is a bit more cautious than expected. On the upside, bulls need to reclaim and convincingly clear 25,800, with 26,000 as a logical near-term target if the policy outcome and global cues cooperate. Given the inverted hammer-style candle printed today, many chartists are expecting more range-bound, two-way trade rather than an immediate breakout, which argues for a buy-on dips, sell-on rallies mindset within that band. For the Bank Nifty, the structure still looks a shade better. As long as it holds above 59,800 to 59,400 on any intraday wobble, Traders will likely continue to treat dips as opportunities, especially in high-quality private banks and select non-bank financiers that stand to benefit from a lower for longer rate environment. A sustained move above 60,400, followed by a push through 61,000, would be the signal that the next leg higher is underway. Until then, expect choppy swings driven by headlines out of the RBI, bond markets, and global risk sentiment. With that backdrop, here is one actionable takeaway to leave you with tonight. Given that the dominant themes today were pre-policy caution, rotation into quality financials and defensives, and a sharp shakeout in speculative pockets like metals and leveraged silver plays, traders may want to avoid chasing breakouts in either direction on the indices tomorrow. Instead, consider planning your trades around the key zones we discussed. Look for staggered buying opportunities if the Nifty drifts closer to the 25,500 support band, or if Bank Nifty retests the high 59,000 region, while being disciplined about booking partial profits or tightening stops as the indices approach 25,800 on Nifty and the 60,400 to 61,000 belt on Bank Nifty, especially with event risk from the RBI still live. That's all for this evening's wrap. If you have questions about specific sectors, stocks, or how to position around tomorrow's policy outcome, send them in and they might feature in an upcoming episode. Stay tuned for tomorrow morning's update to set up your trading day, and as always, trade safe and stay informed.